And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge Show, the show where we bring you where the action is in the broader markets. And last week, front and center earnings season did not disappoint. Among those headline names that reported last week, Taiwan Semi was up there because they are the largest chip manufacturer and they did report record growth, all attributable to AI applications growth. Please keep that in mind. I'm going to be sharing with you all of the areas that subsequent to that release were already on a roll but continued higher. Also in the news last week, retail sales was up in June while weekly jobless claims dropped a little, and that gave a nice boost to investor confidence regarding the economy. And the outlook for the housing market, they came out with news and it does look weak. So we did see a pullback in housing stocks. We'll take a look at that as well. But let's go ahead and get started right now and take a look at these broader markets and see where we close for the week. And here we are, daily price chart of the S&P 500. And you can see an awful lot of bouncing around for the week. Net, we did end up, and the S&P does remain in a confirmed uptrend. We have that positive RSI, positive MACD, and while you can see generally sideways price action, again, there was quite a bit going on beneath the surface. We will get into that. Let's go ahead and take a look at the 11 underlying sectors within the S&P 500. This is a view that we take a look at every week, a 2-month daily price chart. And we're using that relative strength indicator to sort these sectors by strength. And it's not taking into account just last week. It is a rolling movement in the sense that you will see industry groups and sectors migrate, in some cases, from this strong upper quartile down to the weaker areas. We're always on the lookout for those weaker areas to, at some point in time, migrate up to the stronger areas. My work, a lot of it is centered around identifying where that market strength is and then capitalizing on that. So let's take a look. No big surprise here, but we do have technology up here at the forefront. And of course, Taiwan Semi's numbers did help. Taiwan Semi is a big partner with Nvidia. Nvidia also put in a great week as well. Two tech heavyweights, and you can see the group sitting up there at the forefront. Industrials, XLI. Now, this is an area that is very economically sensitive, but more important at this juncture is the fact that we have a number of industrial stocks that are heavily related to these construction of data centers and other areas in that AI space. So we are seeing a sharp advance in industrials. And then as we move through with the S&P sitting up here at the forefront, let's take a look at some of these other AI related areas that had significant moves this past week. Here we are with XLU. This is the utility sector, and you can see we are climbing to new highs. This is all about the increased need for energy, a greatly increased need for energy. So we are seeing utility stocks migrate higher. We'll take a look at add-on plays there. And that's another important part of the markets. When you see these industry groups come into play, oftentimes there will be add-on industry groups that provide services and products. I talked about industrials, a lot of those heavy construction companies that are faring well. They do work closely with utility companies as well as those data centers. Let's take a look at XLY, and you'll see that on that retail sales data, we did see a bit of a bounce here. Nothing overly exciting, but there certainly are names. I'll share with you a few that are sitting up quite nicely, setting up as well. And then also you do want to be aware of other areas that are beginning to potentially advance. This is XLB, and the primary benefactors in this particular sector are going to be those rare mineral type names. I'll share with you one that has just been really on the run up as an example. But again, this is all about the need for these metals in the ability for AI and data compressing. let's go ahead and as we move through, take a look at some of these areas that are a little bit weaker and not a big surprise. We do have consumer staples sitting down here. It is in the throes of potentially regaining its uptrend, but we can see it has been quite volatile. Last week, we did have Pepsi come out with their numbers. They came out with actually very good numbers and they did gap up. However, the stock found resistance at this downward trending 200-day simple moving average. So overall, the group is underperforming. Another area that is down here languishing is XLV, and we can see the group is now back down below this 50-day simple moving average. A lot of this having to do with policy shifts in Washington relative to the treatment of these larger healthcare pharmaceutical type stocks, also the insurance, UNH, and other names that are weighing on this group. But there is one area that is on the move higher. We'll get into that. In fact, right now, let's go ahead and take a look at the underlying ETFs among and within these sectors. And this is a really ideal way to refine your search even more. Again, make sure you're participating in those areas, exhibiting strength, and of course, staying out of those weaker areas. So up here at the forefront, we talked about Taiwan Semi, Nvidia. No big surprise. This is semiconductors, SOXX, sitting up here. Now, while the overall group was up about 0.2%, I will say that there were definitely high flyers, and this is very similar to other areas. You do need to be selective as far as names that you are involved with, and it is going to be primarily those AI related stocks. Also, another area that perked up quite a bit last week were robotics stocks, and semiconductors that provide equipment to that space are on the move higher. So while we are narrowing down the markets, there is a need to refine even further. And that's where my MEM Edge report comes in. I was looking at year-to-date winners list, and we have 5 of the 6 year-to-date winners on that list that were put on several months ago. As we look at some of these other industry groups, let's take a look. KRE, banking stocks popped. I'll share with you a couple of names there. And of course, interest rates would be one development, but we also had earnings reports. I'm going to share with you 2 stocks that pulled back sharply upon the release of their earnings, but similar to this overall group, they have recovered. And so with that, I will share with you how you can stay with that stock and then participate in that bounce or that rebound that took place. IGV software stocks, this is the expanded tech software ETF, and you can see that it had a very nice week as far as the group advancing quite a bit, almost hitting a new high and then pulling back. We'll take a look at a couple of names there as well. But as always, let's go ahead. I did mention healthcare. IBB was the group that I wanted to highlight as being generally in an uptrend. We are not in a fully acknowledged uptrend. We will need to get back up above that 200-day simple moving average, but we do have bullish RSI, bullish MACD. There are several names in this area that are very innovative and that are beginning to advance, but overall, you don't have the backing of that industry group. And small cap stocks were up last week, retaining that uptrend that they gained the prior week. So we are back above that 200, generally finding support above your shorter term moving averages, not quite as vibrant as the prior week, but certainly still in a confirmed uptrend. I talked about housing stocks, and let's take a look because they did dip on that news last week relative to the housing market. It is still below the 50 level. It's sitting at about 33 with that home builders H index. And you can see that the group pulled back sharply, found support at this 21-day simple moving average, but you definitely need to have patience. We are marking time. The uptrend generally still in place, but I'd like to see it get back above that 200-day simple moving average to really confirm that that uptrend can indeed trend higher. Volatility moving lower. It's down in this lower right quartile, and that's good news. We're down at 16.6. Anything below that 18 is generally constructive for the markets. And then last up, another healthcare space that has been struggling. This is IHI Medical Devices ETF, now down below this 200-day simple moving average with a negative RSI, negative MACD. So if you own names in that area, I would urge you to take a look because by and large, that overall group is struggling. I'm going to share with you a view of Nvidia, and there certainly are a number of people that are thinking that the stock is behind them if you don't own it or you did not get into the stock. But what I did want to share with you is that we are overbought on this daily. This is that RSI, and it's up there sitting at about 78. But let's go ahead and take a look at the weekly. This is where drilling out and taking a look at the longer term chart can be quite helpful. So you can see here's this sharp advance coming out of the bear market. However, we are not yet in an overbought position. If we go back historically, you will see other periods where the stock retained an RSI above 70. So it's certainly encouraging on that longer term view. From here, we are going to go out even further and take a look at a monthly chart. And I talked about that AI, the move into that space. Also in the news last week was the fact that Nvidia is now going to begin selling in China, and that had been restricted. The head of Nvidia did meet with Trump prior to visiting China and came out from that meeting announcing that the move toward selling chips to China had in fact opened up. So you have that kind of backdrop to support a potentially extensive move higher. But keep a look at those charts for the longer term view to give you that guide as far as where a stock may be positioned relative to its potential. Another area, and I know I've shared this in the past, but it definitely bears repeating, and that is the fact that these ARK Invest funds are really moving quite a bit higher. ARKX, these are in this particular ETF is in the Exploration and Innovation ETF, and this is all about names of these companies that have satellites and other devices that are being utilized in space. Let's take a look at the next group up here is ARKQ. This is robotics and technology, and you can see where it's really beginning to take off. We're certainly in an overbought position sitting up here, but definitely worth noting because to look at the broader markets, you have a sense that we didn't do a whole lot last week, but I feel this exemplifies this sharp advance that we are seeing in these more innovative types of companies. ARKW is ARKWeb. Let's take a look at the financial ARKF. This is going to be crypto, stablecoin, and take a look, really having liftoff there. And then last up, we can take a look at ARKK, and this is the innovation ETF, also having a very pronounced advance last week. So from there, and this is after a discussion with the producer of today's show, who highlighted the fact that, yes, we are in this area or this period of the markets where you're having this melt up. And in that, he was discussing the meme stocks back in 2021. So we're just going to take, not in any way are we close to that parabolic move. But for instance, here we are with GameStop. And this is something you can do very easily in Stockcharts.com, where you go down to the range that you'd like to be able to see on a given stock. And then you can select the start and end date to get your arms around historical precedent of these stocks. So we are looking at that move in the beginning of 2021 with GME. And this really gives you an example of what that squeeze higher can do. A lot of this was short covering among other characteristics. But from a technical standpoint, looking at this chart, you can see that that RSI got up above 90, almost to 100. I don't recall seeing an RSI quite that advanced. But as far as what you want to be on the lookout for, if we do see an advance that gets to be this parabolic, you do want to keep your eye on that RSI, not only the slope, but the position of that. Your first clue is going to be a MACD, a descending MACD. Once we get that crossover, black line down through the red, in fact, you will see further downside. Another name that we can take a look at from that same time zone is AMC, and it did also have a sharp advance higher. The RSI did not get quite that high, but we did get up above 90. You can go back with AMC and take a look at actually this February period. We were also looking at GameStop, and we did, in fact, get up above 90 there as well. So keep an eye out on that as one way to gauge whether we are getting ahead of ourselves. And then, of course, too, this MACD crossover is going to be that clue that that parabolic upside price action has receded. Last up, taking a look at Qualcomm. This was a big winner back in 1999, the tech bubble. And again, I'm not at all suggesting that we are in a bubble period at all. The numbers are supporting a move into these AI-related stocks, robotics, and otherwise. And the big move into robotics, and I'll share with you some ETFs, is the fact that it's AI coupled with the robotics that is really making that a powerful move as far as the economic and the growth prospects for those stocks. But here we are again. Qualcomm had several moves higher. And what we can see is this MACD crossover really just, in this case, telling us that the stock was due a pause, which it did in fact do. But once we get that RSI into negative territory, a close below these moving averages on heavy volume, that for sure is when you will want to head for the exits. Let's take a look at the bank names or financials that I mentioned to you that actually fared quite poorly immediately after reporting their results. We'll take a look at two names. Here we are with a daily price chart of State Street. And quite simply, these names were sitting up here at new highs going into earnings, essentially priced for perfection. And upon the release of numbers which were good, they were not superiorly fantastic. So we did have this sharp drop. Another name that was also sitting up there priced for perfection is BlackRock, BLK. So you can see we had that sharp drop in response to earnings. Let's take a look at a couple of metrics while we're on these daily charts. And you'll see with BLK, the RSI got to 50, but we did not get below that. So for those of you that, and hopefully all of you, actively use charts with your investing, you would have stayed with the stock with that RSI staying above that net neutral. And from here, we are going to drill down to an hourly chart that can be really useful as far as highlighting this downtrend reversal for those that may have wanted to add to positions or add on that pullback. You would want to wait for the stock to get back above the 5 and 13 hour simple moving average coupled with a bullish RSI and a MACD now in positive territory. State Street is going to look very similar where we had that sharp drop, got into an oversold position on that 1 hour chart, moving back above the 5 and 13 hour with that MACD crossover and a bullish RSI. And I did want to address a question that came through last week. As always, please include your questions below. I enjoy seeing them and also replying to them. And this one was regarding silver, SLV, which had had a big move the prior week. You can see that gap up, very, very high volume. And then we also had that nice MACD crossover black line up through the red. Should you chase the stock or wait for a pullback? Now, of course, the stock has pulled back very orderly to its upward trending 10-day simple moving average. But here again, we can drill down to that intraday chart. Take a look at that hourly chart. And here we are with the prior week's sharp advance on heavy volume. That's indicating that investors want in. It certainly improves the odds of an advance beyond just this 2-day period. But let's take a look at the hourly chart because we did, in fact, pull back. This is the chart that you will want to use as far as entering into a trade that is pulled back and then has now regained its uptrend. Super near term, but it is very helpful. Here's that pullback that took place. We moved back below the 5 and 13-hour simple moving average, and we want to wait for the stock to advance back above those moving averages. And we also had an upward move back into a bullish RSI, and then we had a bullish MACD crossover. Now, it's not super powerful as it relates to this prior advance, but at the very least, we are now back in positive territory with SLV. So that's how I would trade the stock after having a sharp advance. Generally, regardless of the market environment, you are not paid to chase a stock that is sitting up here very close to an overbought position. We can go back historically, and SLV in particular does not have a history of retaining a presence above that overbought position for that RSI. And that is it for this week. Everyone have a fantastic weekend. If you haven't already, go ahead and hit that like button below if you like what you've seen. And as always, there is a link to trial my twice weekly MEM Edge report for a very nominal fee. Have a great weekend. See you here next Friday.